from transactions, journal entries, T accounts, trial balance, income statement, balance sheet, and statement of cash flows, indirect method. The problem reads like this. Prepare an income statement, balance sheet, and statement of cash flows, indirect method. Klaban Motors Incorporation was formed on January 1, 2016. The following transactions occurred during 2016. On January 1, 2016, Klaban issued its common stock for $510,000. Early in January, Klaban made the following cash payments. A. $220,000 for equipment. B. $243,000 for inventory. 9 cars at $27,000 each. C. $25,000 for 2016 rent on store building. In February, Klaban purchased 3 cars for inventory on account. Cost of this inventory was $117,000 at $39,000 each. Before year end, Klaban paid $70,220 of his debt. The company uses the first in first out method to account for inventory. During 2016, Klaban sold 11 autos for a total of $649,000. Before year end, it had collected 80% of this amount. The business employs 2 people. The combined annual payroll is $151,000, of which Klaban owes $1,000 at year end. At the end of the year, Klaban paid income tax $22,000. Late in 2016, Klaban declared and paid cash dividends of $11,000. For equipment, Klaban uses the straight line depreciation method over 5 years, 0 residual value. Solution. In the problem, the transactions are given and we are asked to prepare income statement, balance sheet and statement of cash flows under indirect method. For preparing income statement, balance sheet and cash flows, we need to prepare the trial balance. For preparing the trial balance, we need ledger accounts and ledger balances. For preparing ledger and getting ledger balances, we need to pass journal entries for all the transactions. Therefore, to prepare income statement, balance sheet and statement of cash flows, we need to do the following. 1. Prepare journal entries. 2. Prepare tree accounts and balance them. 3. Prepare trial balance. And then we can go ahead to prepare income statement, balance sheet and statement of cash flows under indirect method as required in the problem. So let us proceed accordingly. In the books of Klaban Motors Inc. Journal entries. On January 1, 2016, Klaban issued its common stock for $510,000. Journal entry for this is common stock debtor to Klaban Capital $510,000. Debit $510,000. Credit. Early in January, Klaban made A. $220,000 for equipment, B. $243,000 for inventory, 9 cars at $27,000 each, and C. $25,000 for 2016 rent on stores building. Journal entry for this is equipment debtor $220,000, inventory 9 cars at $27,000 each, $243,000, rent expense $25,000. Debit. Credit goes to Klaban's capital $488,000 in total. In February, Klaban purchased 3 cars for inventory on account. Cost of inventory was $117,000, $39,000 each. So journal entry for this is inventory 3 cars at $39,000, debtor $117,000, to accounts payable $117,000. Credit. Before year end, Klaban paid $70,200 of his debt. Journal entry for this is accounts payable debtor $70,200, Klaban capital $70,200. During 2016, Klaban sold 11 autos for a total of $649,000. Before year end, Klaban collected 80% of this amount. Journal entry for this is 80% of $649,000 519,200 and 20% of 649,000 goes to accounts receivable 129,800. Total sales $649,000 credit. The business employs 2 people. The combined annual payroll is 151,000, of which Kleban owes $1,000 at the year end. So journal entry for this is salaries expense debtor total 151,000 debit, cash to cash 150,000 which is paid already, and salaries payable 1,000 which is due yet to be paid by Kleban. At the year end, Kleban paid income tax of $22,000. So journal entry for this is tax expense debtor 22,000 debit, cash to cash 22,000 credit. For equipment, Kleban uses the straight line depreciation method over 5 years with zero residual value. Calculation of depreciation is equal to 220,000 by 5 years. Each year it comes to $44,000. Depreciation account debtor debit 44,000 to accumulated depreciation on equipment $44,000 credit. Late in 2016, Kleban declared and paid cash dividends of rupees $11,000. So a journal entry for this is dividends expense debtor $11,000 to cash $11,000 credit. Once all the journal entries have been passed, let us prepare ledger T accounts and balance them to prepare trial balance. In the books of Kleban Motor Inc., ledger accounts payable 70,200 debit, 117,000 credit. Net payable comes to 46,800. Accounts receivable account debit 129,800. Account accumulated depreciation of equipment credit 44,000. Common stock 510,000 debit. Depreciation 44,000 debit. Equipment 220,000 debit. Kleban capital 510,000 credit, 488,000 credit, 70,200 credit. Total $1,068,200. Rent expense 25,000 debit. Salaries payable 1,000 credit. Cash account 519,200 debit, 150,000 credit, 22,000 credit, 11,000 credit. Total 519,200 debit. Total credits 183,000 credit. Net cash balance comes to 336,200. Salaries expense 151,000 debit. Tax expense 22,000 debit. Inventory 243,000 debit, 117,000 debit. Total comes to 360,000. Sales 649,000 credit. Dividends 11,000 debit. Once all the T accounts are prepared and they balanced, let us prepare the trial balance. In the books of Kleban Motors Inc., trial balance, account titles, debit, credit. Cash balance debit 336,200. Accounts receivable debit 129,800. Equipment 220,000 debit. Common stock 510,000 debit. Accumulated depreciation on equipment 44,000 credit. Kleban's capital 1,068,200 credit. Accounts payable 46,800 credit. Salaries payable 1,000 credit. Sales 649,000 credit. Inventory 360,000 debit. Dividends 11,000 debit. Rent expense 25,000 debit. Salaries expense 151,000 debit. Depreciation 44,000 debit. Tax expense 22,000 debit. Total of debits comes to 1,809,000 and the total of credit comes to $1,809,000. Once the trial balance is prepared, let us calculate the closing stock as at the end of the year. Inventory purchases 9 cars at the rate of 27,243,000. Further purchase of 3 cars at 39,000, 117,000. Total 12 cars were purchased during the year for 360,000 and there is a sale of 11 cars the company follows first in first out method. So first 9 cars are sold at cost of the 9,000 sold is at 27,243,000. Cost of the 2 cars sold is at 39,078,000. Total cost of 11 cars sold is 321,000. So there is a balance of 1 car left at the rate of 39,000 in the as a closing stock. Once we have trial balance and the closing stock, let us prepare income statement, balance sheet and statement of cash flows as required. In the books of Club and Motors Inc. income statement for the period ending 31st December 2016, expenses amount, income amount. On the income side, sales 649,000 and closing inventory 39,000. Total credits and total incomes comes to 688,000. On the debit side, inventory purchased 360,000, rent expense 25,000, salaries expense 151,000, dividends paid 11,000, depreciation 44,000, tax expense 22,000 and balance 75,000 is the net profit. Total debits comes to 688,000 and total credit 688,000. In the books of Club and Motors Inc. balance sheet as on 31st December 2016, liabilities amount, assets and amount. On the asset side, cash 336,200, accounts receivable 129,800, closing inventory 39,000, equipment costing 220,000, less accumulated depreciation 44,000, net cost of equipment comes to 176,000, common stock 510,000, total assets comes to $1,191,000. On the credit side, when we have to record liabilities, accounts payable 46,800, salaries payable 1,000, Cleveland's capital 1068,200, add profit 75,000. Total Cleveland capital including profit comes to $1,143,200. Total liabilities comes to $1,191,000 and total assets come to $1,191,000. In the books of Cleveland Motors Inc. statement of cash flow indirect method as on 31st December 2016, particulars, amount and cash flow from operating activities, net profit 75,000, add non-operating expenses, add depreciation 44,000, increase in accounts receivable less 129,800, increase in accounts payable, add 46,800, increase in salaries payable 1,000, increase in closing inventory less 39,000, total non-operating expenses net comes to minus 77,000. So funds from operating activities is minus 2,000. So now cash flow from investing activities, purchase of equipment 220,000, purchase of common stock 510,000, total minus 730,000 is the expense towards investing activities. In cash flow from financing activities, increase in capital 10,68,200, increase decreasing cash net from all the activities is 336,200, cash at the beginning nil, so closing cash balance is 336,200. Finally, we have all the journal entries 1, 2, 3, 4, 5, 6, 7, 8, 9 here and 15, about 15 T accounts, accounts payable, accounts receivable, accumulated depreciation of equipment, cash, salaries, expense, common stock, depreciation, equipment, tax expense, inventory, cadence capital, rent expense, salaries payable, sales and dividends. The trial balance and income statement appear like this, which is already explained. The balance sheet looks like this. It is already explained earlier. The statement of cash flows is like this. Funds from operating activities is negative 2,000 and cash flow from investing activities is we have purchased equipment and common stock worth 730,000, and cash from financing activities from Kleban Capital 1,68,200, and net cash from all the activities is 336,200. As this is the beginning of the business, there is no opening balance of cash, so closing cash balance is 336,200. This is how cash flow statement of cash flows in indirect method is prepared.